on the upgrade on Goldman. Shares still higher as the market turns around. Let's switch gears and talk gold. Bitcoin with a huge move over the weekend, and gold in sync as we see the precious metal now trying to break towards the high end of the range of the last 6 months. Let's bring in Alan Nuckman, Chief Market Strategist at Agora Financial. Alan, you're not necessarily looking at the commodity for a trade today. You're looking at the miners.
Well, we still have to look at gold itself. So gold itself had been trading in a range between 2050 and 1850 for about 4 months. It's come back inside that range after that dip down, very much a positive. It was about 10% off its highs. So I was looking at gold, the commodity, as a reward to risk play. So after stocks at new highs, and again, new highs today, that's a very positive sign to see new weekly highs. Bit of a pullback now, but we did post that number. So looking at gold, looking for that to snap back. The way to play it, I'm looking at, is with an option in NUGT, NUGT. It's a 2x ETF. If you look at that, it's traded between 60 and 120, which targets a midpoint at 90. And recently it's traded between 60 and 75 for the last few weeks. A breakout of the 75, which happened today, that targets 90 as well.
So, Alan, this thing has been a little bit of a dud. I mean, not like, it's just when you have an overall, sideways kind of move here over the last a couple months. Obviously, the leverage that's in this ETF shows that we're still far below where we were, right? The sell-off in the spring was immense for this, so it's kind of skewed the chart a little bit. For the most part, it kind of moves in the direction of gold. As we see this morning, it's up 10%, more than quadruple the move in gold.
Right. So the way to play this, I'm looking at the 65 call. Again, 60 is that super support level. The 65 call for February has a delta of 75%, as we do here every week. The stock substitution strategy, an option that's going to behave like the stocks and it costs much less than buying the shares. 45 days. And again, if we get to that 90 level, which is rather conservative, again, 120 was a high back in August. Get just back to that midpoint at 90, this option doubles in value. So right now, I think it's trading for about 16, and we were at 78 in this ETF. So the break even on it's $2.50 higher, but you can see how this, because it is a two-time option here, that how it accelerates very, very quickly when the market momentum is on the move. And that's exactly what we see today. Today is a major breakout in gold, and let's see if it can get some follow-through, because for a long time, it had disconnected from a lot of the other levers that should have pushed it higher.
All right, so up big this morning. Alan, you're looking for continued move here. And where's the spot that you look for to get out? I mean, are you looking at the high from a couple months back? Because it does seem like, at least on the chart of gold, there's a few points that could be resistance, similar in NUGT maybe is that jump up towards the hundreds.
What I typically do with my option strategies, and again, it's as much the strategy as it is the stock, is that I have an exit standing at 50%. So if I get to 50%, I get out of half my positions, and I put in the exit on the other half at 100%. So we've done this a couple of times in NUGT. It's been very successful because when it moves, and that's what we're counting on here. 90 is really my near-term target, which is the halfway point of the 120 drop down to 60. So let's see how it acts if we can get to that halfway point. That's a key resistance level. If it blows through that, we could see gold again significantly above $2,000, and this NUGT vehicle would perform very, very, very well.
Okay. All right. Appreciate it, Alan. Thanks for the trade. Mr. Nuckman, Chief Market Strategist at Agora Financial, looking for some more strength in the miners. Buyer beware, the things do swing, as we saw in March, but also as we see today, big as gold makes a move. Question is gold breaking back towards the highs, or is it going to run into trouble at the middle of the range from the last several months? Right now, equities are running into some trouble.